Hi traders, Nathan Brake here from ACY Securities. Well, last week, Friday night, was a big night for the markets and we saw the non-farm payroll data, the employment data come out on the US, and boy, did it make markets move. We saw an extended trend occurring in this US dollar. It is just going from strength to strength, and as a result, the cross pairs, we saw the pound get absolutely hammered, breaking through weekly support levels, along with moves down in the euro dollar, Aussie dollar, New Zealand dollar. I mean, we are seeing a very strong US dollar as a result. However, the real worry for me, and that, to be honest, the trend is your friend. So that was somewhat expected. What we saw was an increase in the number of jobs created, okay, for the month. We also saw the unemployment rate drop from 4.2 back to 4.1. So what does this mean? Well, this means that with more people working, more consumers having more money, inflation could be sticking around. We may not even see the lowered expectation of interest rate cuts to occur, and we could see the good old inflation continue to increase and perhaps bounce. Okay, so this is the real worry for the markets. So what we saw was, of course, a strengthening US dollar, as I mentioned. But on the negative side, we saw a weakening stock market in the US. So right now, this morning on the Asian market open for the week, we really saw this S&P 500 now put in lower tops and bottoms, okay? It is breaking support levels. The question now is we're seeing lower tops and bottoms on the Dow, we're seeing lower tops and bottoms, of course, on the NASDAQ, because it is so affected, okay, by this concept of interest rates remaining higher for longer. So are we going to see not just a correction, but a far deeper correction? And considering that a lot of Aussies have their superannuation, or in the US 401k and around the world, heavily invested in stocks, I would say that this could be a real amount of concern. And if we start to get an extreme sell-off here in the stocks as a result of a stronger US economy, which I get it, it sounds crazy. It's like, well, shouldn't stocks go up? But the question I have is, if stocks are going down because they're not getting rate cuts, then maybe they are overvalued and need a correction, okay? So these are the questions that the market is starting off the year with, and we are going to see, in my view, based on the technicals and the data coming out, a far deeper correction in these stocks, and that could then spread around the world. So not to become a panic merchant here, but does the US have to step in and do something about this with Trump coming into power? Because let's be honest, Trump is all about a higher stock market. The other worry, I guess, is inflation. So when I look at inflation right now, I'm watching gold. Gold is continuing to go higher. Yes, it's in its range. It's put in a lower top, but it's heading back to the top of that range. Why would that be? Well, they're seeing lots of jobs being created. Therefore, people, consumers, they have money to spend. And when they have money to spend, the CPI, which we'll see come out on Thursday night, Australian time this week on the US, as well as the PPI, that will give us a really good gauge, because if we continue to see the CPI or inflation start to tick higher, okay, then we've got a problem. They can't cut rates. They may not be able to cut rates even a couple of times in the year ahead. And that could be very worrying for the stock market. And the question then becomes, just how low can the other crosses, say the euro or the pound? The pound broke a weekly support level at this 123, and it is absolutely gone below it. But keep in mind, before we get too excited, we all know that Trump's come out and said he wants lower interest rates. Okay, so he's going to be trying to push that. Right now, with stocks really starting to sell off, could that even provide a reason why we might need lower interest rates, or we might need to be able to support the economy? So what I want to see is a hold below this weekly support levels on both the euro and, of course, the pound dollar. So Or could this just be a false break? And could we start the year with a change in the rhetoric? Could we get some different forward guidance? So this is an exciting time to be trading, folks. But right now, US dollar trend technically is up, supported by the data coming out economically. And more importantly, stocks are selling off. So Bitcoin is in the range, gold is in the range. All of that says to me that inflation hasn't gone away. They don't really have it under control, and it could remain a problem for the rest of this trading year. That's all from me, folks. Have yourself a great trading week.